Hi riders, welcome to our trend continuation tutorial. This indicator is ideal for longs and shorts that goes along with the trend on the same direction. So let's go straight to the charts. First step, where to find this indicator? Just go to trend rider indicator number 2, trend rider algo number 2, right here. You add this indicator to the chart, go to settings, and make sure you check this box, show trend continuation strategy. This is a new indicator. Where to enter? Let's start with a short example. So the first thing that we need to have is to wait for a leading candle. In this case, for shorts, we want a red candle. So we see the chart right here, and we have this first red candle. This is our leading candle for a short, and we should enter a short here. And we can see the price went straight down. This is another setup. We have a leading candle here, and the price went down. This is for the entry. The candles that follow these ones are the following candles. So in case you missed this entry, you can enter the short only if you find another candle with the same color above this price, so your risk is lower. For example, if you miss this entry and you want to enter right here, the price is lower, so your risk will be higher as you are aiming for the price to go down. It's less profit if you enter lower. On the other hand, for longs, you need to wait for this green candle right here. This is a signal to enter longs. And this would be the following candles because these ones appear very close to the leading candle in terms of price. So we see right here that the price eventually went up, and depending on how you manage your stop loss, you could have been stopped out here or enjoy the profits on the way up. Of course, the indicator does not work all the time. You can see here a green candle and the price went down, and we didn't have a bounce until much later, so there would be this would be a non-profitable trade. Having said that, it is very critical for this trading setup that you set up a correct stop loss with enough room for volatility. Regarding the stop loss, we can use the pivot candles as reference for where to place our stop loss, or we can use an additional tool provided by TradingView, which is called Fixed Range Volume Profile. Let's see an example here. We go to this red candle, which is a short signal. And next we're gonna look for a pivot point. A pivot point meaning a moment in time when the price was going one way and start going the other. So we have a pivot point right here, price going up, went down, clear pivot point, and the closest one would be right here. Those are two possible stop loss levels. And the other tool we could use is a fixed range volume profile. So we click this fixed volume range profile, we find the latest range on the charts would be this one. As we're trading when this candle appear, this is the latest range, and we're gonna click here where this range started until the last candle. And we see right here that the most volume traded during this range was right at this level, so very close to this stop loss. So we're gonna finally say that our stop loss is gonna be right here at this level at 20k approximately. Let's go with another example. Here's another red candle. Let's look for pivot points. A pivot point could be around here, or maybe this one, which is far away, and the closest one being, yes, this one. But this one happened before this huge move, so actually there's no a real pivot point close to this one. So we're gonna use another tool, our fixed volume range profile. We select here when this range started until this candle appear, and the highest volume here is around this area here and here. So we're gonna set up our stop loss at this level, which is very close to the fixed volume range profile, highest volume zones, and we're gonna set right here the stop loss. which is a little bit above of this candle, of this previous candle wicks. So we set the stop loss here. What would have happened in this case? You see that the price went a little bit up. In this case, it hit our stop loss barely. So if we would have placed this a little bit above, maybe it didn't hit us, but in this case it hit, and then it went straight above. So a little bit bad luck on this one, but this is how the process works. If you want to be a little bit more careful, you probably would have placed a stop loss around here, but in this case there would have been too much risk because the stop loss is too far away. Let's go to another example, as I know a lot of you have been asking me for this stop loss tutorial. So here is the next candle, which signals a potential short. So let's go look for pivot candle first. This one here, it is the previous candle wick. Another possible pivot point would be here or even here. Very similar to this one. So this one is acting very powerful. And the volume profile, the range started here, this candle here, and you see that the volume was traded right below this candle. So this could be a very good trade. We won't use this as a stop loss. And we're gonna use this one as a stop loss, similar to this one, because this one is a little bit too far, too much risk here. And we're gonna place the stop loss a little bit above this one. So we have a little more room as we learned from the previous trade. And in this case, the price went a little bit up and straight down. In case you missed this trade, you could have entered maybe here, than the next candle that appears very close to this one, but it's a little bit higher. So we could have been a little bit more profit. If you missed this one and you enter and see the charts when this candle appear, you don't enter here, please, because this one is lower here. So you need the price to go much lower to be on profits. Another example here for longs, and this is the failed trade, the trade that was non-profitable, but we would have placed our stop loss. So in this case, we look for pivot points. The closest one would be the previous week here, right here. And if we use our volume, fixed volume range profile, then this one won't help us this time. So we could place our stop loss. We could place our stop loss right in this line, and we see that the price went straight down, and this one was closed in a loss. But not a huge loss in this case, as we managed correctly our stop loss. Another example for longs would be this candle here. First green candle to appear, ideal setup for a long. We identify pivot points, would be the last week is the pivot point. And if we use the fixed range profile, we can see that the most volume was traded around this level, so this is our only reference. We could place our stop loss here, or if we even want to go far back in time, we could maybe place here, but or too low for stop loss. And in this case, we never visit this level and price went straight up. So another important point or bonus, which is how to increase our winning ratio. And the key thing here is how do we use confluence from our other indicators to help us decide if we want to take the trade or not. So in this case, we're going to use our trend right algo number 1. We go to settings and we're going to use the horizontal support, the pivot trend line, the take profit and reversal sign, attention signals, and the M signals. So let's go back to see some of the past trades. In this case, here we have a red candle. We already reviewed this case. This was our pivot point. So there was no confluence here, but in case you enter this trade, here we have this red candle plus the blue M signal, which is a bearish signal. So we have confluence here, and actually a downtrend started here as well. Let's go see another trade. Here we have another bearish signal. If you enter here, place your stop loss, you're doing fine. And here is another candle in case you missed this one, which is very similar, but also have this bearish M signal here, and we see that the price went straight down. We have confluence there. Here, this failed long example. In this case, there was no bullish signal, not here, not closed, so there was no confluence here. We have another candle here, red candle signaling a short. We have a bearish end very close to this one, so there's some kind of confluence here. Some more trades. There is another potential short here, but in this case the pivot point was very far from this level. So in this case I would have taken this trade because the stop loss would have been too far. Let's continue the chart. Here we have the potential bull, but there was no confluence. Not saying that we must have confluence, but we can see that it helps a lot. Here we have this potential short, and in this case, depending on how we place our stop loss, maybe around here, this wouldn't be the stop down. I think we already reviewed this one, but you can see that when the candle appears again together with the bearish M signal, it went straight down. Same here, very similar setup. And this one is actually another trade. It's not the same as this one, even if the candle is lower, because we can see the price went down and then went up, then candle appear again. So this is another different setup. Here we have a potential short with a stop loss probably around this area. Depending on how you place your stop loss, maybe it was stopped out or not. And then, yeah, it would have been eventually stopped out, but there was no confluence at all. So we're seeing how the confluence really is helping a ton. Here as well, we have this potential bullish setup, but no real confluence. Here we have another potential bullish setup, no confluence. We have the bullish signal here, and we have some sideward action until it eventually went up. So some final words. I would recommend that you use this indicator in confluence with the other indicators that we just saw is much more powerful. And never go all in when using a single indicator. Increase your position depending on the confluence you see. And also calculate your stop loss range. As we just saw, if your stop loss will be too far away from your entry, then wait for a better entry. No need to rush.